Mm, cool. Yeah. Yeah, we'll get her done. It's not impossible. All right. Cool. So let's go through this. I hope you've been doing well. The yens have been good. We've been picking on yens for a while. I've been busy trying to get my family home, but I can show you why letting the winners run makes sense. So I shorted it on Monday. It's Thursday, and I'm up 6 or 7 pips just on the pound yen. You know, so there's trades out there for sure. So I hope you're finding them. Quantbox has been very clear on buying yen for a while. The technicals are there. So I hope you're crushing it. Okay. Let's take a look around the world. Yields are up a little bit. I believe this is going to drop today. Oops, let me get out of the disclaimer. Okay, let go, let go. I believe this is already coming down today when you look at the overnight session, right? 4.29. I think it's 4.22 now. So that should improve. Remember, I want this yield to go down. What that means is the US government is able to borrow money, which is a fancy way of saying the bond market is up. And I want that to happen. Okay, great. So yields up. That's not good for anybody. It's kind of like your credit card interest payments going up or your mortgage payment going up. Nobody wants that to go up. Oil is well below 80. Well, that's seasonal, not a shocker. But we were pushing at the high end of 80, and now we're in the middle of the 70s. Okay, interesting. Gold coming down, stock market coming down. Big, bad, negative day. We've had a big decline in the stock market now. I think we can say that. NASDAQ was down 3%, I think, yesterday. But you know, it's seasonal. We talked about it in January. You need to do something and prepare for a stock market decline starting on Canada Day. All right, well, what is it now? 3 weeks after Canada Day? And the stock markets around the world are collapsing? Uh-huh. Yeah. We knew that, right? At the Council of Investment Advisors, what we did is we got out of our NASDAQ exposure, not all of it, but 80% of the NASDAQ exposure we got out of and rotated that into the treasury market in anticipation of, well, that stock market is probably going to come down soon. So we rebalanced and rotated money out into a safer asset. It was not unpredictable. And now, in this case, when you do that before, you're like, oh no. But now it's like, yeah, prepared. I'm fine. We're good. Okay. So it shouldn't be a shocker to anybody that we've had some big down days. Uh-huh. Yeah, that is normal. Cool. Euro dollar. Okay, just hang. There's not a lot going on. And Bitcoin. Boy, that's been a ride because it was at 53 and then it was at 68 and now it's back down and it's been doing this for a while. Yeah. Yeah, and it's funny because I was watching even over the weekend. I was watching it on the phone, watching it go up and down, up and down, up and down, and it turns out if I would have held it, I probably would have broken even. Yeah, but anyways, so out fine. We'll see. Down quite a bit though, huh? That's a big bad negative day. So we'll see if there's any like coming out of risk, which would be Bitcoin in the stock market, and really even gold. Is it going to move over to the bond market? Like, are you going to buy some safety and earn some yield and all that kind of stuff? Another point that I'd like to make, just in case you didn't pay the $4.44 in January to know this information, but not only did we anticipate a July pullback. We also discussed very clearly that in this particular year, not normally, but in this particular year, not only would the stock market likely fall in July, but it could possibly fall all the way to October. Are you prepared for a scenario? It's not a prediction. I don't make predictions. Okay. How would you like to live your life? Do you want to predict the next earthquake in California? Or do you just want to build skyscrapers that can survive an earthquake regardless of when it happens? Okay. I don't make predictions, but I'm prepared. Okay. That's what we mean by ready, willing, and able. Oh, yeah. So interesting life we lead. Okay. Some of these numbers are starting to change. Some of these numbers are starting to change. And the cool thing is the new scorecards. I hope you have been playing around with them. Notice all the colors are proper and everything now, which is nice and pleasing to the eye. But they've been double checked and verified, and which means I need to double check the people that double checked, right? Trust but verify. I haven't had time to do that, but I assume everything's correct now. But one of the things the new scorecard tells you is how the scorecard changed today from yesterday. Yeah, very cool. So, anyways, let's take a look at the gauges. Uh-huh. And do I have to do this every time? No, just that. By the way, did you see that sometimes these things pop up? It's because we're using customized apps built to run on the Google Cloud, but it's not necessarily the Google's product. So you might have to like accept, click that button, and you're done. I don't know if that comes up for you. It's not an error, it's just some sort of disclaimer. But anywho, all right. So risk off, risk off, risk off. By the end, by the end, by the end. Okay. All right. Remember, none of this evaluation is technical analysis. You probably saw, like, I think it was pound yen hit the annual R2 and stop and then collapse. Well, that's technical. So, on top of that, okay, it all makes sense. But what we're looking at is 8 different constituencies all making the same decision that you're making. So, what decision did they make? Okay. Well, it went from 3 weeks ago, mostly risk on, to today, risk off. Now, a lot? No. But remember, I've taught you that the market, in particular the stock market, you take the stairs up and the elevator down. Why? Look, all the institutional investors saw this coming. They're like, okay, normally seasonality in the stock market dictates that, some profit taking occurs in July. Oh, but this year we got the election, so you want to get your money in soon. Okay, but everybody still knows what's normal. Oh, but AI, the Magnificent Seven, dragging everything up. Yep, yep, yep. But the moment it comes down, what happens? All the stop losses are close. Remember how I was teaching about stop loss placement? Well, everybody else in the market knows how to do it too. And so what happens? Eventually, the day it drops, it hits stop losses, which makes the next day bad, which hits more stops, which hits more stops, which hits more stops. Cascading, it's an avalanche. I think I said a week ago, it's like a tsunami. You want to swim with it, don't swim against it. And so, anyways, I was reminded of that by, like I said, Monday or Friday. I can't remember when I took it, but I'm like, sell it, walked away, came back 600 pips. You should be, and all of them are doing that, right? That's reflected both technically and fundamentally. I want you to understand that it's like, for example, stops being hit. Remember, everybody was long all the end pairs. But do you remember right around Canada Day, I said it's harvest season. I don't know which day each farmer is going to decide to harvest, but it is harvest season. Everyone will make their decision when to harvest, but it is the time, right? And anyways, the stock market coming down in the end strong is not surprising. But what I was trying to get to at those points, is, in particular in the day trading group, is what I'm thinking is, when do you decide it's time for you to harvest as well? Right? Remember that? A strong opinion, weak conviction. Okay. Yeah. So anyway, look, when you look at all these constituencies, so we're a -3 on risk off. You know, S&P 500 is down 2% for the week. Most of that probably just yesterday. So, gold is down. I have that good, but you might score that bad. Okay. Yields are down week over week on short-term treasuries. Dollar is neutral. Okay. Yen is really strong. Look at that. Yep. Should be short. Look, dropped 5% in the last 30 days. 30 days. So if you haven't made the decision yet, when are you going to make a decision if it's already down more than 1,000 pips from the top? When are you going to make the decision and switch? Right? Like, that's what I was pushing at. You need to think about it before you do something, but you can't ride it all the way back down. Right? All right. VIX volatility is way up. Once again, we predicted that. So again, at the Council of Investment Advisors, which we focus on portfolio construction and management, we now have $70,000 in cash invested. There's an opportunity we've been waiting months to potentially buy because we like what it's doing, but because we anticipated VIX going up, it would be on that particular investment, which is exposed to VIX, you want volatility to drop. If volatility drops, you'll do well. If volatility goes up, you'll lose money. So we're like, we want to own this, but we think volatility is going to go up because of seasonal analysis on QuantBox. And then suddenly, month over month, volatility is up 30%. Oh, thank God. If we would have bought that investment based on past performance, because it was performing well, why? Volatility was low. If we just bought it based on past performance, we would have taken a bloodbath on that. I'm assuming, I'm not looking at the asset right this second, but we didn't make the investment, even though we loved the opportunity. It was the wrong time. How did we know that? QuantBox. Look at that, up 30%. Well, vol is bad. Volatility is bad. You don't want that. But talk to me in the third week of October. Might be a whole different world. Yeah, no one will want that asset. They'll say, oh my God, this stupid thing's been falling since July. Perfect. Perfect. Right? Perfect. Huh? Yeah. Perfect. Yeah. All right. So anyways, okay, not bloodbath here, but definitely something has changed in the last 3 weeks, and right on schedule. Cool. Okay. And by the way, if you've missed everything, like you just watched all of this and it's changed and you didn't change, and you hear me and you understand, but then you go back to doing what you're used to do, um, don't feel bad. I want you to then just see it, like, have it be weight, like, in not a negative weight, but the lesson should have an extra level of reality or carry to it. Like you're like, now you've seen it. We've talked about it. We have all these tools that show it's coming. I talk about it every day, and then suddenly it's happened, and you didn't respond in the new ways. You responded in the old ways, and then have that carry weight where you're like, okay, now we talked about it. We prepared for it. We've seen it, and now it's happened. Now you believe, right? Now you will force yourself to change. Just because it makes sense and it's logical doesn't mean you emotionally react differently. So now you have to prepare yourself like, okay, if you didn't respond the way you could have or should have, then think about what you should have done in your own personal opinion. Go back and look at your charts. Go back and look at the back tester. When should you have been more aware and sensitive? Go back and spend hours on seasonality and then just say, okay, now that I know, what would I do now? So that in the future you behave differently. The worst case scenario is you just keep sitting here not changing your behavior. The information is important, but the idea is because you're informed, you change your behavior. That's the critical part. Okay. So, anyways, don't feel bad. Come up with a plan. Okay, let me zoom. I'll have to change these layouts a little bit for this, but anyways, okay. Easy, consistent trend? No. Shooting at rabbits. Or you break them apart. Okay, we're in a risk off scenario, and we know in a risk off scenario, buying dollar and buying yen, buying Swiss franc is the normal reaction. Yeah, every year slightly abnormal, but whatever. You just start like, what is normal? If you don't know what normal is, how can you deal with abnormal? You can't. Okay. Because they're inversely proportionally, yeah, blah, blah, blah. You still have to know what's normal. Where are you on the map? Where do you want to go? Okay. And then you have to deal with the mountains, the forests, and the streams and come up with a strategy. Okay. So we can look at like the miners and say, well, normally you're buying yen and Swiss franc. Agreed? Yeah, it even shows you the risk gauge for crying out loud. Okay. Great. Okay. Yen strong, yen strong, yen strong, yen strong. Swissy strong, Swissy strong, Swissy strong, Swissy strong, Swissy strong. Oh, you mean everything Swissy and everything yen? Yeah. You're welcome, by the way. If you didn't know that, like on the risk gauges, it just shows you it's a -3. Buy some yen, bro. Okay. Now, the fact that, you know, not only does it explain what the normal response to the negative market conditions, now this is actually what has just happened in the last really even just 12 hours, the last few hours. And everything Swissy and everything yen. Like Swissy is without a doubt strong. Yen is without a doubt strong. It works. You see, you need to have total buy-in. Okay. QuantBox was 100% correct, but it had to look at 8 different markets on 3 different time frames just to look at correlation data. But also it's looking at what, 14 different macroeconomic conditions in 27 economies. Like, oh my God, to get to the fundamental bias. Okay. So, anyways, oh my God. Okay. Now, typically dollar is strong. What do we have here? Dollar strong, not your dollar not as strong as euro, but dollar strong, dollar strong. But look at this, and dollar strong. But in this case, yen is stronger than dollar. Swissy is stronger than dollar. So how do you use this? Well, when you look at the risk gauges today, it says you should be buying yen, or you should consider looking at buying yen, buying Swissy, buying dollar. Okay, what's the next step? Which one do you bet on first? Yen is stronger than Swissy, and Swissy is stronger than dollar. Right? So you sell the yens, okay? Then you do the Swissies, then you do the dollars. And so I could look at this and I would assume, let's say Swissy yen is down, but not down a lot. So I can go back and there, look, see? Yen is 0.04 stronger than Swiss franc. Well, I knew that because I saw it here. So we call that relative strength exercise. I hope you do this. I swear to you, I spent hours and hours and hours every single day when I first started trading to try to figure that out. Now it takes you 4 seconds. Are you doing it? No, I don't have 4 seconds to spare. I got to get rich today. Should I have sympathy for that person? I don't know. I don't know. I try. The best I can get is faking empathy. But I don't do it very well. Right? If you don't have 4 seconds to make an intelligent decision, but you just got to get to your charts and throw some trades down, I don't know if I have any sympathy or empathy, right? I spent hours. And when you see like the way I set my charts up, the reason I have all these scanners, okay, is I use them to do relative strength exercises. And I go through which one's stronger, which one's stronger, which one's stronger. Do it old fashioned. Now I have a little tool that just says, yeah, euro strong. I would do it the old fashioned way when I started. Before I had the indices just make it easy. I don't like easy. Okay? I don't like easy. I don't want the Girl Scouts to be easy and fun. I want it to be hard. Right? Teach those little girls how to think and be tough. Right? Yeah. See, I'm a dad. I've been through all that. Right? Luckily, we had really good Girl Scout leaders. But then, there's more to Girl Scouts than selling cookies is what I'd like to, So anyways, whatever all that means, you should be able to do it yourself the hard way if necessary. Because if that gives you the confidence to do what you're supposed to do, then that's what you should do. Do it the hard way. You don't have to believe QuantBox. It's just doing the work for you. But if you can't do the work, like what happens with the airplane's autopilot turns off? Okay. There's a YouTuber, attractive young woman who does her YouTube videos flying her airplane, whatever, small aircraft, private pilot's license. Problem is she went up, she's got like 6 cameras inside the cockpit to record it and put it on YouTube. This is, look, a pretty girl flying. Problem is she didn't know how to use the equipment properly. It's all recorded on YouTube, unfortunately. And she didn't know how to do the autopilot. I swear to you. And she flew it right into the ground on YouTube. And it turns out she didn't have it set up. And then when she realized she didn't have it set up, she didn't know how to turn it off or adjust it, or she just, you need to know how to fly an airplane. First and foremost, you need to know how to do relative strength exercise. And then you understand how the autopilot works in his thinking. You understand like the comparison I'm trying to make? You need to know how to do the work, and you need to do the work. And then once you're able to do that, oh yeah, QuantBox will do it for you in 4 seconds. But if you're just relying on this, but you don't know how to set your trades up, you don't notice any of this, and you don't even understand what it's telling you. You don't know. You just want the autopilot to do it. Okay. No, you should be selling the yen pairs. Look, QuantBox told you buy dollar, buy yen, buy Swiss franc. What order do you do? Sell the heck out of the yens, then move to the Swissy, then move to the dollar, which could lead to 12 to 15 trades, all moving hundreds and hundreds and hundreds and hundreds of pips per day each. Or you're just trading euro dollar. What the heck are you talking about? You see, you're like, dude, you're playing with the euro dollar. You're nuts. It's moving 42 pips. Well, the other one's moving 420 pips, right? Like you got to do the tool. You got to know how to use these tools. It's so powerful. Okay. The power that you have in your hands with with QuantBox and everything else, now going into TRADARS is absolutely totally incredible. But you got to use them, please, right? This is why I keep pushing. You have the resources. Now it's the behavior you need to adjust. Okay. So this is a pick me up speech, not a push you down speech. Okay. Calendar. Yeah. Okay. Is it really the 25th? Oh, what is that? I have to accept. View cards. Wow. Yeah, everything normal. Do, do, do. Do, 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 do. You guys have fun trading the CAD interest rate decision? I believe you had an opportunity at Investor Boot Camp. Claims. That's coming up in 20 minutes or so. 243 less claims. So we have access to that data too. No. Oh. Says Otterbox on it. I'm like, oh my god, it says QuantBox. I'm like, coffee mug. Like, oh, what a coincidence. No, Otterbox. All right. Come on, Google. Come on, Google. Load it. Come on. Wonder if I can bump something else up. Non-farm payrolls. Okay, that popped up fast. Okay. Pretty, isn't it? Yeah, you're pretty. All right. Employment, unemployment claims. There we go. So I look at each colored box separately. I might put it back to the more traditional, but I'm looking at them. I'm just trying to save space here. And I want to see the numbers clearly. When you have everything scooched together, you can't see the numbers well and all this. So the three separate candles just stacked vertically instead of horizontally. It's not one big candle. And so green is the result, gray is what was forecasted. Now, obviously, I need to switch those. Forecast should be the bottom, then green, but it takes time to figure out how to do that. All right. So, what are the numbers? Okay. So, the last one we expected 229, but we got 243. That's higher than expected. And the logic is that will allow the Fed to cut interest rates. Also, the stock market coming down hard and fast also will allow the Fed to cut interest rates. It could spook the Fed into doing it, even if they didn't want to. Like if the stock market keeps dropping and we're down 12% next week, maybe the Fed goes in July to save us all. Save me, right? Save me, J Bell, right? Um, yeah, well, who knows? So we want a bigger number, even though economically that isn't good. We're not in a normal economic situation, right? This is all post-COVID nonsense. So, anyways, abnormal is the new normal. Uh, so if the expectation now, what was it, 237 or something like that? That is less than what we got last month, but more than the forecast. So, just in general, if we just think about it that way, because there's all different ways you can look at this data, but the expectations now are for weekly jobless claims to increase significantly. The expectation is the economy is slowing down. That's our base case expectation, which is leaning toward a Fed cut. So, in particular, if it's anywhere near the 243 actual, okay, there's the 29. It's in white. Um, then that's good. It should be good. The previous was revised down, but not by months much. Actually, it went up slightly from 222 to 223. So the 2 weeks ago, week 28. So we're in week 30. So week 28 was about the same, but didn't hurt the idea that the Fed could cut. Last week was definitely the Fed could cut. And our expectation is that number is rising. So if it's anywhere near 243, 240, 239, great. Game on. The Fed cutting as soon as possible. Cool. So that's how you want to look at today. That means it's Thursday. I guess we're going to do a swing trade, huh? Yeah, sweet. Okay. Most people are electing now to just watch the recordings, and it makes me sad, I must say, because I love doing those meetings with you guys, but I love interacting with you, but I also love how you guys would interact with each other when I did group work and stuff like that. 90% of people just watch the recordings. It's disappointing. I know life's complicated and you're busy, but I thought if you look back like a year ago, our swing trading meetings were amazing. But I need your participation. But the level of detail was extraordinary. Now you just have to listen to me babble about technical analysis. But I already know your technical analysis. So if you need Papa to do it with you, sure. That's fine. I love it. I'm going to do it anyways, with or without you, right? I'm going to do it. But yeah, that's right. JP and Denise and me is the trifecta. But it should be dozens and dozens of people. So if you are watching these recordings instead of showing up, we miss you. You should show up because it'll be better with you. Okay. Yeah. So, anyways, yeah. So there's the fundamentals. Some scorecarding here. Forex. Okay. Oh, and by the way, on that pound yen trade, I will tell you that so it's up like 600 pips or something in just a few days. I remember at the time taking it as a scalp. It was a nothing of a trade, and the pound was the strongest currency at the time. It was the worst yen trade. The thing is, it just happened to have a better technical setup at that moment on the smaller time frame. But I did something radical, like I sold it off the hourly 21 EMA or something stupid like that, right? Like so basic. And it wasn't the best trade. I'm sure, I'm certain. Well, I shouldn't say that. I would guess that I could have picked any other yen trade, like Aussie or CAD. I bet you they produce much more. It just happened to be the entry, but I've been busy trying to get my family home, trains, planes, and automobiles, right? There was a period where I had my bags packed to drive to Florida, and then that flight was canceled. So I'm like, I'm jumping into the car right now. My bag is already packed, and I'm driving to New Jersey to come get you. I'm like, it's noon. I will be there at 3 a.m. I will pick you up. I will get 2 hours sleep. Then we'll get on the road and I will drive you home. Right? Like that kind of stuff. Like, my gosh, I could have destroyed these yen pairs. You could be up 5,000 pips in the last 3 or 4 days. Um, I had more important things to do than make money. Yeah. So anyways, but you should, unless you were in a situation like that. And so I picked the slowest horse, but it crossed the line, right? Yeah. I wish you were betting on all those horses and you own all the ends and all the Swissies too, right? So, anyways, um, so where are we now? Okay. So how do you use this? Here's euro, right? We're looking at euro dollar. Oops. I'm sorry you have to click all these boxes. I'll have to see if I can do that somehow in the back end. Okay. Go to here and you find I don't know, Aussie. See how you can just do odd? There's all the Aussie pairs. Nice, right? Do you need this bigger? I'm not fully zoomed in, but like I can make these menus a little bigger and stuff like that. But you go Aussie yen, okay, and pull that up. Also, if you're looking at this on your PC and you need to make it bigger, I know you have to scroll way down. I think I can fix that. But you go down here where it says Looker Studio and the full screen, and you can do it that way, and it zooms in quite nicely. And all of this is inside of TRADARS, which is cool. So anyway, so here's a Aussie yen. Okay, Aussie yen there. And on July 22nd, okay, we retested from below the 21 EMA. Remember, support becomes resistance. That was 105 and a half. The current 7-day projection is 95.4. 1,000 pip drop from that day. It's dropped 500 pips already, but okay, the best case scenario, another 500 pips down. Base case, what is that? 150 pips down. Worst case, it pops up and fizzles out. Look at the seasonality on this. July to August. July, August. July, August. July, August. Does that say up to you or down? Mhm. Now, that only happens on average going back 10 years. But other than that, it's random. I also know that's true on a 20-year. But anyway, going back 10 years, July, August. Okay. July, August, July, August. Uh, ugh. Yeah. You just have to get in the game. The gym, it's like what happens when the horse kicks you off? What what we were all taught different things. Right? What do you do? My daddy said, shoot the horse. Whoa, whoa. Okay. No, what I was taught is as soon as possible, get back on the horse. Right. So do your best to try to catch it. Okay. Now the technicals is not with the focus of this um live stream. Um, but I can cover that maybe at Forex today. It goes back to like we had a scenario about a year and a half ago where I'm like, the markets are going to move and they're moving without you. And they're not going to pull back and give you a perfect little 382 Fibonacci retracement like you're used to. This is not normal. It's moving hot and fast. And the way you trade it is ugly. It's kind of breaking some of our rules. But let me show you how to do it right. Right. And I went through the training and they were probably yen pairs moving up. Um, so maybe we can cover some of that. Okay. But the best way, JP, is set up the next trade and catch it. Okay. Lamenting isn't going to help. Right. So you're like, okay, well, what's the other lesson here too? I just showed to use QuantBox to say there's a reasonable chance it's going to drop somewhere between 150 to 500 pips more. It's a reasonable chance. How do you get to that conclusion? It's linear projection based on what has already happened. So statistically, it is possible. So now set it up and take it down. Now you do technical analysis on your chart. Okay. Yeah. Okay. I also predicted in January, and I do believe you paid the $4.44, right? What did I say? This recovery period is not going to happen this year. It's going to shift way over here. Okay. I don't have my drawing tool. Let's see if it'll actually start. I had to reboot my machine. Fingers crossed. Will it load? Oh, it's trying to do something. There we go. Oh, yeah. Cool. All right. What I said in January was this year is going to look like this. Can anybody concur? That the pattern's still going to play out, but it's going to shift to the right. Cool. So the other thing to keep in mind, JP, is that the markets are moving. It's going to be difficult. They may not pull back or they might reverse. You might be totally wrong. You might have missed the whole damn thing. Or maybe it's only half done. We don't know. So the other thing is little losses are acceptable. I showed you a month ago that I had 80% losses and I was very profitable. Right? You remember that? 80% losses. It was a horrible month. I made money. Okay. So you try and take little shots that are logical. Where's the resistance? You're selling rallies. You need some up. But on what time frame? 15-minute, 5-minute, hourly? Well, we don't know. That's your job. You have to do the analysis. But if you're wrong on some of these, they're little losses and it's totally acceptable. If you're going to try to make the 500 pips, if you're aiming for 95, it's cool. If you're taking those risks, but your average winner is 40 pips, fail. It's a fail. You just right. It's a total fail. Right. Yeah. So little losses, as long as you got big winners, you'll be fine. Which means you need quant boxer to understand all this, right? The trends and the directions of the trends and the seasonality. And, you know, I, as your market consultant, I work for you. And I say, well, this year is going to be different than the next 10. I'm going to shift everything to the right. Well, that's my job, but I work for you. And I'm on your team. So you're like, you might have this year, you'll probably have the time to, right? Looking at this is the Magnificent Seven have been holding the entire stock market up, and they're coming down hard right now. And there is room for a very significant repricing, which is also seasonal, right? So, is there more room down? Yeah, yeah. Well, but open up a chart, take the trade, and only have small losses, and you'll be fine. Yeah, Denise, it's most likely profit taking and seasonality lining up. It's two rivers turning into one. Yeah. And to me, and I'd mentioned this where I said, look, nothing like intervention doesn't work. So it's not the Bank of Japan, but the Bank of Japan knows the seasonality. There is no doubt. And they tried a couple of times right at the peak part of the seasonality when the yen generally tries to get strong, anyways. And they timed it. They timed it. They finally got what they needed, and the rest of the market did what they were going to do, anyways. And that, in of itself, creates yen strength. See, people use the yen to leverage other trades. So if they're getting out of the stock market, they're deleveraging their yen. What does that mean? Stock market down, yen up. Why? They use the yen to leverage. Like it's just literally inversely correlated. Well, then the Bank of Japan, they're not stupid. Okay. Yeah. But we also know, because of QuantBox and my experience, that by November, like I don't care if the stock market drops 30% this year. Let's say it just does. Between now and then, it's hard. Like it's a down 30%. Oh, yeah, I'm going to buy it. I love owning American companies. Yeah. So good. And we know it'll likely happen either around the Fed meeting or around the election that it recovers. Okay. And I wouldn't be shocked if it's really closer to the election, like I've been saying, the third week of October, because there's something like if everybody knows that when the Fed cuts, the stock market's going to rally, then somebody's going to play that, the anti that, buy the rumor, sell the news kind of thing. Who knows where you might have like a rally third week of August and then the Fed cuts and like, yay, the stock market's going to go up. Stock market comes down another 10%, wipes out all the amateurs because we know the real move is more like late October. So, we really have to be nimble here this year. But it's not unpredictable. You can be ready and willing and able. Yeah. So like right now, 80% of the institutional market a week ago, let's say, was short the Japanese yen. Oh, thank you. 235. Oh, that's a disappointment. Um, but it was almost 85%. And what do you think it's now? Probably 77%, right? Like, you got to be able to read it. It's not that it's 81% short, it's that it's 4% less short. And remember, this is money. And how much money went into those yen trades? Oh my gosh, I can't even imagine how much. Okay. Oh, and the GDP forecast too. Yeah, yeah. We can take a look at that too. But just okay. And notice these changes happening right on schedule. Okay. I remember head high by July, time to harvest, right? All of that right in the beginning of these setups. And then remember, even before it dropped, it double topped and pound yen, for example, on the annual R. It didn't even go 5 pips above the annual R2. Like, I'm telling you, extraordinarily perfect, some of these setups. Like, too perfect to believe is true. Yeah. Yeah. Extraordinarily too good to be true, but it's true. So, anyways, let's take a look at GDP and then I'll let you out of here. So, you go to fundamentals, economic activity, GDP growth. Okay. Okay. So, you can see we were much higher way back in 2023, and then down, down, down. Okay. And now we're in the mid ones here as our new normal. But as you know, if you've taken the investor boot camp course on fundamentals, on macroeconomics, the 50-year average for GDP in the United States is 2.2, and potentially even slowing to 2.0. Okay. So, anywhere around two is okay, but what what the market is looking for is for GDP to remain below the long-term. So let's uh let's do this. Come out of here, move out of this. Dollar strong. Yeah, but we already knew that. Okay. All right, cool. Um, mm, mm, mm. If I go here, template, we go to blank. Okay. Here's what economists are looking at. So let's draw a chart here. Okay. And then this is, okay, GDP. Okay. Nominal. Sometimes Y, it's called Y star, which is GDP, GDP nominal. Okay. All right. And what we do here, I gotta get rid of this page. There we go. That is, let's say, on average, going back 50 years, 2% growth. Okay. And well, GDP gets bigger and bigger and bigger over time, but growing at 2%. Okay. The rise over the run. Okay, great. And then we have our business cycles, right? Below potential GDP, above potential GDP, and below. When you're above, so this is now GDP actual. Okay. So that's actual GDP. And when you're above, okay, Fed um, raises interest rates. Do they cut interest rates when GDP is 2.5, even though it was 3.0? No, because you're still above potential, meaning the best case scenario is everything is aligned perfectly. And no matter what, every year you become 2% richer. Think of it. If your standard of living increases 2% every year, in 10 years, you're more than 20% richer because it compounds. You're like 25% richer than 10 years ago. Your TV went from 55 inches to 80 inches for the same amount of money. Oh, but your wages didn't go up. Shh. You have a big TV. Be happy. Okay. Good. So, but what happens when you drop below? So now you also have to pay attention to things like the peaks and valleys. Okay. Now, in this scenario, GDP is below the potential of what the economy could produce, but something's wrong. So, in this scenario, what happens is the Fed cuts interest rates. Fed, okay, down. So, this is how you want to look at GDP. 2.0, 2.2, depending on the calculation, that would be your normal level of GDP in the United States going back 50 years. And it's very consistent, by the way, very consistent. And we call this yellow area a productivity gap. So we'll call it a GDP because GDP is just productivity of the economy gap. Okay. What do we call this? Inflation. Basically, for some stupid reason, the economy is growing way faster than it should be. In this case, the federal government put $5 trillion of monopoly money in the economy. Actually, what they did is they borrowed money from foreigners and then gave them money away for free. Well, we still owe the money to the foreigners, but we shouldn't have been this productive. We shouldn't have had a 5.2% GDP in 2023. 5% GDP in the United States, a mature economy that already has all the investment. What did we do to create that activity? Did we build bridges? Did we build no, no, no. What did we do? We bought meme stocks, but we had 10% inflation that hurt every single American. Now, and this really gets me in politics. I want you to understand this. I'm going to go political here. And both sides are horrible at this. So I don't like either side. Both parties will, one way or another, tell you that inflation has been fixed. Is that true? Think about that. I'm going to wrap this up. If we're doing a 2.5% GDP, then we're above potential and the Fed should not cut yet. But we've been farting around 1.3, 1.4, 1.5, 1.6 for a while. That means the Fed could cut and we have a productivity gap. I want you to understand that. Okay, let's go back to politics. We talked about inflation. Okay. Filet mignon, okay, steak. Oops, at your grocery store. Let's say it was in 2015. We'll go back well before COVID. It was 12.99 a pound, so 13 bucks. And then it was 14 bucks a pound. Then it was 15. Then COVID, right? So I don't know if I'm getting the years right. So starting from whatever. And then it went to 18, 22, 25, okay? 26, 25, 25, 25. Okay. The government, the Fed, politicians, everybody will tell you inflation has been tamed. We don't have inflation in the United States. What's the problem with that? We still have prices up nearly 100% from before. So everything's fixed, right? So if I had done this like 26, 26, 26, if I had planned this ahead, makes more sense that I do 26, 26, 26. Okay, CPI in the United States is equal to 0% month over month, 0% year over year. So we don't have any inflation in the United States, right? Except steak is still up 100%, but we have no inflation. There's a problem with that, isn't there? You're like, wait, 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 wait. The rate of change has gone to zero, but you haven't fixed my freaking problem. I can't afford to eat. I'm eating chicken, for crying out loud. It's gross. If you're cooking with chicken, you gotta wash your hands. You're like, you have to use the right cutting board. Oh my God, if you lick your fingers with raw chicken, you're gonna die. You can eat raw steak, by the way. Like chicken, I think is gross. You cut through it, water comes out. Ah, I didn't know chickens lack blood. They must be evil, right? But you cut through a beautiful piece of steak and the blood comes out. It tastes so good. Oh, a heartless, bloodless vampire chicken. Oh, gross. It could kill you if you don't do it right. I don't want to eat chicken. I want to eat steak. But the problem is, and then what happens to chicken if nobody can afford $26 a pound steak? Well, now everyone's eating chicken, so chicken prices go up 40%, right? And yet the politicians are like, "Hey, bro, everything's fixed." I'm like, "You haven't fixed anything." Okay? It's like the plumber coming out and they're like, "Well, we fixed that broken pipe." All right, great. But you're standing in knee deep water in your basement. Has your problem been solved? Okay, the pipe's not leaking, but you're still standing in knee deep water in your basement, right? Your problems are still there. Okay. Yeah. So, yeah. Okay. Um, are you buying anything recently that's cheaper than pre COVID? No. But prices are still going up 3% a year, compounding every year, 3% higher than the year before. Oops. Where's my quant box? Okay. So we have CPI. So we can go to fundamentals. Oh, that's interesting. I didn't even, I need to add all of that. I think we have that data. See, we need the inflation reports. But nonetheless, that's how you want to look at all this. Okay. So hopefully that was insightful. Um, Not knowing just, was the number better than expected or worse than expected? That's pretty amateur hour of way of looking at things. As if you're going to be a professional investor or trader, You should understand the context, not just whether the headline number was better than expected or worse than expected, but what does a 2.3 actually mean if the number came out 2.3? You're like, oh my God, but that's higher than potential GDP. And that means we don't have a productivity gap. And without that, there's little need for the Fed to actually cut interest rates, you know? Oh, yeah. So you understand the number, not just what the market thought. Because let me tell you, the market's stupid. I don't know who comes up with the expectations, but much of the time they're ridiculous. Like the experts predict the 3-month average. Very often that's all it is. What's your expectation for NFP? Did you do really, really deep analysis and talk to hundreds of companies and do all this analysis, or did you just take the 3-month average? It's usually just simple, stilly stuff, right? Right. So, anyways, know the numbers, what they mean. I took too much of your time this morning, and I apologize for being late. But maybe I'll see you in 15 minutes or so at Forex today on the YouTube. The YouTube. Yeah. Peace on earth. May the pips be with you. May your profits be above average. Cheers.